For centuries, money has been a promise of value, of stability, of trust, but also a promise built on a silent condition. That trust only exists if it is placed in the hands of others. Banks, governments, corporations, all became guardians of money and, over time, guardians of power. For generations, the financial system operated under an unwritten rule. If you want to participate, you must obey. Obey the schedules, the policies, the fees, the restrictions. And when everything seemed solid, the cracks appeared. Crisis after crisis. Inflation after inflation. Bailouts that saved banks, but sank entire economies. Time and again, trust was put to the test. The history of money is also the history of dependency, of how citizens surrendered their autonomy in exchange for security. Until one day, someone decided to question it. What if money could exist without banks? What if trust didn't depend on institutions, but on open source code visible to all? That idea, which would have seemed crazy 20 years ago, is now reshaping the foundations of global economic power. A silent, decentralized, and transparent idea that is redefining the very concept of wealth and control. Thus was born DeFi, Decentralized Finance, the world's first financial system that requires no permissions, signatures, or intermediaries. A network that doesn't ask for trust, it proves it. And it is beginning to quietly challenge the dominance of the most powerful banks on the planet. Across the English-speaking world, this shift is already underway. In the United States, open finance rails, tokenization pilots, and crypto-native startups push innovation even as regulators debate the rules. In the United Kingdom, the FCA's consumer protection focus coexists with London's ambitions to be a global hub, while the Bank of England explores a potential digital pound. Canada advances open banking and tests blockchain use cases with banks and fintechs. Australia extends its consumer data right and runs experiments in tokenized assets and a pilot CBDC. From New York to London, Toronto to Sydney, the question is no longer if DeFi will integrate with traditional finance, but how and on whose terms. Join me to discover it. Let's learn what DeFi is and how it works. Before understanding its impact, we must understand its essence. Decentralized finance, DeFi, is an alternative financial system built on blockchain technology, capable of replicating traditional banking services, but without banks. Loans, investments, insurance, savings, currency exchange, everything that previously required an intermediary is now executed through code. Instead of relying on employees, physical contracts, or paper signatures, DeFi uses smart contracts, automated programs triggered when specific conditions are met. For example, if you send this amount, you receive these tokens. If you deposit your funds, you generate this return. There are no managers, no paperwork, no room for manipulation. Trust is no longer placed in an institution, but in the mathematics and transparency of open source code. Everything happens on blockchain networks like Ethereum, BNB Chain, Polygon, or Solana, which record every transaction publicly and verifiably. And instead of bank accounts, users have digital wallets, where they control their private keys, their direct access to funds. In this ecosystem, you don't use a bank, you are your own bank. That's the real revolution. A permissionless financial system that operates 24/7 and follows a simple, powerful principle. If you can program trust, you no longer need to ask for it. It all starts with a revolution many call the Trust Rebellion. For centuries, banks were at the heart of the economic system. They promised security, prosperity, and stability. They were the guardians of money, the intermediaries of trust. But in reality, what they built was an invisible web of dependency. Every time you deposited your savings, you relinquished control. Every loan approved, every transaction processed, every authorization was not an act of freedom, but of permission. And for years, the system managed to convince you that this was normal, until the breaking point arrived. First came financial crises, those that began far away but ended up devastating entire households. Then came inflation, bailouts, sanctions, and economic blockades. Each of these episodes eroded faith in the traditional banking system. Money, a tool created to unite, began to divide. Millions of people were left out of the global financial system, without bank accounts, without access to credit, without the ability to protect their savings. Meanwhile, banks grew, governments printed money, and inequality reached historic levels. That's when a group of developers, economists, and dreamers decided to rebel. Not with protests or banners, but with lines of code. They created a new architecture of money, one that removes the need to trust anyone. An economy built on transparency, where the rules cannot be changed for political convenience or economic power. Thus was born DeFi, the movement that replaces faith with verification, bureaucracy with automation, and obedience with autonomy. Instead of signing contracts with ink, people began signing them with code. And instead of relying on institutions, they relied on mathematics. DeFi didn't emerge as a fad, but as a response to a system that stopped delivering on its promises. Because when banks fail, citizens look for alternatives. And this time, the alternative didn't come from a country or a currency, it came from technology. That's why many call DeFi the rebellion of trust. A revolution that isn't being fought in the streets, but in blocks of code. Although still quiet, it is already changing the history of money. And that is how the new financial system is emerging. Money, as we know it, was designed to depend on intermediaries. DeFi proposes the opposite, a system that runs on its own, without tellers, without schedules, without permissions. Imagine a 24-hour economy where anyone, anywhere on the planet, can lend, invest, or protect their capital with just a phone. This is not a digital utopia. It's already happening quietly beneath the surface of the traditional banking system. In this new model, banks are replaced by protocols, autonomous platforms that operate on public blockchain networks. Each transaction is executed by a smart contract, a kind of program notary that neither negotiates nor forgets. If the conditions are met, the exchange occurs. If not, it simply doesn't. Interest rates aren't set by a board of directors. They are adjusted by the market itself, second by second, according to real supply and demand. And instead of a bank account, users have digital wallets, cryptographic spaces that don't ask for names, IDs, or nationality. Only one key, the one you own. That key is your financial identity, your direct access to a system that neither discriminates nor censors. To understand its magnitude, just look at the map. In Africa, farmers use DeFi to protect their savings from currencies that devalue every month. In Latin America, thousands invest small fractions of their savings on global platforms without relying on unstable local banks. And in Venezuela, where inflation destroyed the value of money for years, DeFi became a lifeline. As the bolivar vanished, young developers and entrepreneurs began using stablecoins, decentralized savings platforms, and peer-to-peer lending protocols to protect their income and escape financial collapse. Some transformed family remittances into digital dollars. Others learned to earn yields in cryptocurrencies while banks closed their doors. Even during the rise of NFTs and the play-to-earn ecosystem, Venezuela experienced a unique phenomenon with games like Axie Infinity and other digital farming projects. Thousands of young people found an unexpected source of income in these virtual worlds. They played, raised creatures, or cultivated digital assets and received payments in tokens convertible to dollars. It was a bubble, yes, but also a lesson. It showed how an entire generation used technology to counter devastating inflation and keep the economy moving when everything else failed. And although many of those projects faded over time, they left behind something more valuable: the collective understanding that financial literacy and digital innovation can become tools of resilience in any crisis. In cities like Caracas, Valencia, and Maracaibo, communities are already educating people on the use of wallets, smart contracts, and decentralized savings. For many, it wasn't a technological luxury, it was a matter of survival. That is the true power of DeFi, not speculation, but independence, an independence that doesn't require a passport, a bank, or permission. Across Europe and Asia, entire companies are beginning to tokenize their assets to move capital without bureaucratic friction. But this also introduces new power dynamics, what some call the new power players, driven by CBDCs. While the world tries to understand what's happening, major financial centers are preparing for a transformation they can no longer stop. The United States, birthplace of many early DeFi projects, faces a paradox. It was where the revolution began, and now it's also where efforts to control it are strongest. Platforms like Uniswap, Aave, and Compound laid the first foundations of the new system, but their growth has raised alarms at the Federal Reserve and the SEC. The country that dominated global monetary architecture for a century now confronts a network that recognizes neither borders nor permissions. That's why Washington is pushing for legal frameworks such as the Genius Act, an attempt to set limits without slowing innovation, to create rules without destroying the essence of decentralization. And although regulation seems inevitable, the tension between control and innovation has become one of the most important economic battles of the century. In Europe, the strategy is different. While the United States debates, the European Union legislates. MiCA seeks to define how cryptocurrencies and DeFi projects should operate within a framework of transparency and protection. Brussels doesn't want to be left behind, but it doesn't want to lose control either. So it's moving forward in parallel with the digital euro, a state-issued currency experiment that, at its core, seeks to compete with the freedom of decentralized platforms. Enter a new player, CBDCs, central bank digital currencies. Their stated objective is to modernize the financial system, but the backdrop reveals a deeper struggle. CBDCs are the direct response of states to DeFi, the way to reclaim power that open networks are taking from them. While DeFi seeks autonomy and pseudonymity, CBDCs aim for traceability and control. Two opposing visions of digital money, one based on program freedom, the other on institutional oversight. China leads with the digital yuan. The ECB is experimenting with the digital euro, and the Federal Reserve is testing its own prototypes. But behind the rhetoric of modernization lies a troubling question. Can digital money truly be free if every move can be observed or blocked by political decision? This is the central tension of our time, decentralization as a promise of freedom and state digitalization as an instrument of control. The future of money is being decided on that fine line, and the countries that manage to balance both worlds will define the next economic decade. The Anglosphere snapshot. United States, innovation sprints ahead while rules lag. A tug-of-war between the SEC/CFTC and Congress-shaped stablecoin and DeFi oversight, even as banks and fintechs pilot tokenization and on-chain settlements. Dollar-denominated stablecoins already power remittances and liquidity across DeFi rails. United Kingdom, London is positioning for tokenized finance. The FCA sandboxes and the Digital Securities Sandbox test real-world assets on-chain, while the Bank of England explores a retail, digital pound to modernize payments within a clear regulatory perimeter. Canada, a stricter stance from the Canadian Securities Administrators pushes exchanges into pre-registration and tighter custody/staking rules. Meanwhile, the Bank of Canada researches a CBDC as provinces explore blockchain for capital markets efficiency. Australia, policy work on a fit-for-purpose licensing regime runs in parallel with the Reserve Bank's EAUD pilot, where tokenized bonds, invoices, and wholesale settlement are trialed to reduce friction across the economy. In Asia, the story unfolds at a different pace. Singapore, South Korea, and Japan are positioning themselves as laboratories for the financial future, allowing startups to test new DeFi tools in regulated environments. Meanwhile, China is developing its own state digital currency, showing that control can also be tokenized. The message is clear. In the new economy, the sovereignty of money will be contested between those who program it and those who monitor it. In Latin America, the revolution feels different. Here, more than a technological phenomenon, DeFi has become a necessity. In countries with chronic inflation or restrictive banking systems, Thousands are learning to save and transfer value without asking anyone's permission. Brazil, Mexico, Argentina, and Colombia are leading adoption, while entire communities use stablecoins to protect their daily income. What is debated in committees in major financial centers is lived in real time here. For the first time, global financial power no longer depends solely on Wall Street, London, or Hong Kong. It is also being built on decentralized networks operating from every corner of the planet. And although there is no official map yet, the global economic landscape is changing hands, block by block, contract by contract. So, what is the future of money? It comes down to integration, risk, and hope. Every technological revolution begins with a promise, but also with a risk. DeFi is no exception. As its influence grows, so do the challenges. The first is security. The code is transparent, but not foolproof. A bug in a smart contract can wipe out millions of dollars in seconds. Hackers no longer attack vaults, they attack protocols. And every time an exploit hits the ecosystem, the entire industry learns a costly lesson. The second risk is interconnectedness. The global financial system is so intertwined that if a major protocol fails, its effects can ripple through the entire market. DeFi is still building its foundation, and any weakness can jeopardize the trust that sustains it. The third challenge is regulation. Governments face an unprecedented dilemma. How do you regulate a system with no borders? How do you supervise a market that belongs to no one? The balance between innovation and control will be the most complex battle of the next decade. If laws stifle decentralization, the revolution will die. But if there are no rules, chaos and fraud will destroy it from within. And yet, despite all these risks, the direction seems irreversible. What was once a marginal experiment now moves hundreds of billions of dollars. Traditional companies, institutional funds, and central banks are beginning to integrate their own systems onto decentralized networks. The concept of banking no longer means buildings and teller windows, but algorithms that perform financial functions without asking permission. The next few years will be decisive. DeFi will evolve into a more mature phase, more secure, more scalable, and more connected to the real economy. We will see tokenized bonds, automated insurance, global credit without banks, and community savings systems managed by AI. This integration will mark the birth of a new era, a hybrid economy where the centralized and the decentralized coexist. Banks will learn to live with code, governments will adopt transparency as the norm, and citizens will regain something the system had taken from them: control. But beyond technology, the most profound impact will be human. DeFi is not just a financial shift, it's a cultural shift. For the first time, millions of people are understanding the true value of economic independence. They are learning that freedom cannot be begged for, it must be programmed. So, where we are now, code becomes law, and in that, freedom and destiny reside. Money has always been much more than a medium of exchange. It has been a symbol of power, control, and faith. For centuries, we believed that to keep it safe, we needed intermediaries, institutions that decided when, how, and how much we could use it. But every crisis, every bailout, every abuse of power taught us otherwise. It taught us that trust isn't imposed, it's built. And today, that trust is beginning to be written differently. Code has become the new law of money. A law that doesn't obey political or corporate interests. A law that doesn't discriminate by nationality, language, or ideology. A law that, for the first time in history, can be read, verified, and enforced by everyone. Decentralized finance isn't a fad. It's a sign of technological and human maturity. A reminder that true progress lies not in replacing banks, but in replacing dependency. And although the path is still fraught with risks, the important thing is that the door is now open. A door to a more transparent, more inclusive, and freer economy. The future of money won't be printed on paper. It will be written in blocks. Blocks that don't belong to any country, but to those who understand the value of freedom. Therefore, this revolution isn't measured in prices or charts. It's measured in consciousness. in each person's ability to take control of their own financial destiny, to understand that money is just a tool and that true wealth will always come from knowledge. If this content helped you understand where the new financial system is headed, subscribe, share, comment, and join us at Increscendo Finance. We're not talking about empty theories here, but about the reality that is transforming the world right now. Because understanding the future is the best way to prepare to live it. Until the next video.